Fortune favors the brave truly applies to contrarian investor. Contra means opposite thinking from the rest of the world. Contrarian investor means they are bullish when the whole world is bearish and bearish when whole world is bullish. Whenever stock market goes through a sharp downturn, investors worried about their losses leads to anxiety and sometimes panic selling. This cyclical nature of markets present an opportunity for contrarian investor. Those who go against the crowd and make those bold moves when others are fearful. The core idea is very simple: go against the crowd. Human emotions, the greed and the fear for money drive market cycles. When most people are fearful and selling, contrarian investor see it as a buying opportunity. And when the market is euphoric, they becomes cautious and see it as a selling opportunity. Contrarian investor understand these emotions and use them to their advantage. They rely on fundamentals and historical patterns to make informed decisions. Contrarian investing not only works in stock market, but it works in various parts of life, various industries, and even in sports. Because if you see the example of MS Dhoni in 2007 2020 World Cup, MS Dhoni made an unexpected decision by giving the last over to Jogendra Sharma, an inexperienced bowler, instead of a senior player. He noticed that Misbah-ul Haq struggled against medium pace and his decision worked. Jogendra dismissed Misbah, securing India the first ever 2020 World Cup. Contra thinking. Look at Virat Kohli. He transformed Indian cricket by prioritizing fitness and aggressive gameplay, going against the traditional trend of, Indian, players are not into fitness freak. His leadership helped India achieve a historic test series in Australia in 2018 and 19 days. A feat no Indian team has ever accomplished. And many famous win he has accomplished for Indian cricket absolutely on contrarian principles. In automobile industry, Elon Musk bet on electric vehicles where no one believed in Tesla's potential. Today, Tesla is a leader in EV sector. So, contrarian investing works, in real life. If you see the example of the stock market in all the boom and the crash period. In 2008, Tata Motors acquired Jaguar Land Rover for a $2 billion deal. But when the global financial crisis hit, it led to the fear of overpayment in this acquisition. Tata Motors stock crashed by 60% from 650 level to 150 level. Contrarian investors saw this as a temporary setback and bought Tata Motors at a discount. Despite short-term losses, Jaguar, with its strong brand value, global customer base and a history of luxury car demand, it bounced back in 2008-2010 recession. By 2010, Jaguar has posted $1 billion in profit with an annual incremental sales, from 2009 to 2010. So Tata Motors stock rebounded to 600 level by 2015, delivering 4 times returns to those contrarian investors in Tata Motors. Everybody know Michael Burry, who is a big time US contra investor. In 2008 housing market crash, he predicted US housing market collapse. And in 2005, Burry has brought some credit default swaps against the mortgage-backed securities, betting that the housing market will crash and he will make money. By 2007-2008, the default surge in US housing market, MBS collapsed, and the Burry's fund, Cyan Capital, has made more than $700 million profit, where the other banks like Lehman Brothers went to bankrupt. So contrarian investing works when it is backed by deep research. He profited by betting against irrational market optimism in case of housing market. So markets generally moves in cycles, boom, bubble, crash and recovery. The 2008 financial crisis, the COVID-19 crash and even the dot-com bubble followed the same pattern. So every investor market crash recovery has been inevitable. History shows that market reward those who remain patient and invest during downturns. So if you see the big time investor Warren Buffett, his philosophy is be fearful when others are greedy and greedy when others are fearful. We read this quote so many times. Look at his action in 2008-2009 great financial crisis, where he bought all those stocks and how he is rewarded in 2010 recovery period. Sir John Templeton invested heavily in those war-torn economies after World War II when everyone else was fearful. His strategy paid off immensely. In India, Rakesh Jhunjhunwala Titan investment is a masterclass investment. He identified India's rising middle class and the shift towards organized jewelry retail. So, betting on Titan's strong management and scalable model, he invested 5 crore rupees at just 3 rupees per share in 2003 in Titan. And Titan, with his expected expansion plan in Tanishq, Fast Track, and eyewear, transforming into a retail giant. And by 2024, the stock scored post past the 3,800 level, turning his investment into 11,000 plus crore. The lesson is very simple. Short-term struggle don't define long-term potential. Understanding industry trends and business model helps spot the multi-baggers early. Even the big new time investor Vijay Kedia's investment in one of the stock, Tejas Network, highlights the power of spotting a particular stock early. When Tejas Network has crashed from 350 level to 50 level, he has invested quite a bulk quantity in the company. Tejas was a small telecom firm overlooked due to tough telecom competition. But Kedia foresee India's data boom and push for the domestic telecom manufacturing. He invested into stock at some 50 rupees, 70 rupees level when it was untouchable. As digital infrastructure grew, Tejas thrived and the stock soared past 1400 rupees in 2024, delivering 12 to 15 times return. So the key lesson here is the contrarian investing early in a promising sector, even when others ignore them, can yield massive rewards. There are challenges in contrarian investing. You need a lot of time and patience. One major challenge is timing. Buying too early can result in temporary losses and before the market turns around. So behavioral biases also make it difficult to go against the crowd. It's not that easy. Investors must develop emotional discipline to stick to their strategy despite the market noise. Additionally, not every falling stock is a good investment. Some decline due to genuine business weakness. Proper research is crucial to separate opportunities from risk. So how a normal investor can apply this contrarian investing tools and indicators to become a successful investor? Contrarian investing is not limited to professionals. A regular investor can use this strategy by identifying market overreaction. Fundamental parameters like P multiple and corporate earnings can help you to judge the overvaluation and undervaluation of equity markets on the fund side as well as on the stock side. Technical parameters like RSI, price action, their overbought zone and oversold zone can help investors. Sentiment analysis and narrative of media, how one should think against them and execute those profit booking and even the buy on the dips. ValuEthics, which is a Pune-based investment management firm, its valuation matrix, its own proprietary system, proactively predicts about indicators together. Where in the purple and yellow investment zone, we consider it as a buying opportunity for mutual funds and stocks. While in the green zone, we consider it as a staying invested opportunity with no action plan. While in the red zone, we tactically book profits. So practicing active management over the passive style of investing instead of simply the 12 monthly passive SIP style of investing to migrate into 18 installment style of SIP with little lump sum investment of 6 extra installment in the purple zone and yellow zone. Our season calculator says that we give an extra return of 3 to 5% annually over any direct or regular mutual fund scheme. So contrarian investing is not just about going against the crowd, but the patience to wait for the market to recognize the true value of investments. So as history has shown, fortune favors the brave and reward investor patience. How active investing outperform passive investing? Please watch this video. Worth investing your time. Time is money and we value your time. Happy investing.